Hey there, fellow traders. Welcome back to the Trade Smart. Today, we're diving into a story that resonates with so many of us in the trading world. A tale of impatience, FOMO, and the roller coaster ride it can take us on. So grab your popcorn because we're about to explore the story of Tim, the trader who thought impatience was his superpower. Once upon a time, in a land not too far from the trading pits, there lived a trader named Tim. Tim was known for his impatience, and he wore it like a badge of honor. He believed that to be a successful day trader, you had to be in constant action, like a hummingbird darting from flower to flower. But what Tim didn't realize was that his impatience was leading him into a trap that many traders fall into without even knowing it. Tim's day typically started with a glance at the pre-market movers. He'd see a stock soaring in the pre-market hours, driven by news or speculation. The excitement would course through his veins as he imagined the profits he could make by jumping on this hot trend. He'd quickly buy in, feeling like a winner before the market even opened. But here's the kicker. As soon as Tim entered a trade, it seemed like the market had a vendetta against him. The stock, which had been on an upward trajectory moments before, suddenly dipped, causing Tim to panic. He'd sell at a loss, only to watch in disbelief as the stock rebounded, often surpassing the price at which he initially entered. This cycle of buying high, selling low, and chasing after the next hot stock became a daily routine for Tim. He was stuck in the FOMO, fear of missing out, roller coaster, and it was a wild ride that consistently left him feeling nauseous. Let me paint a vivid picture for you to understand the FOMO effect. Imagine you're at a carnival, and there's a Ferris wheel, one of those massive ones with brightly colored cabins that slowly rise and fall. You've been watching it from a distance, and it seems like a fun ride. People are laughing, enjoying the view, and having a great time. Now imagine you're not in line to get on the Ferris wheel. Instead, you're on the ground, watching it go round and round. As you watch, you start to feel like you're missing out on all the fun. You see the excited faces of those in the cabins, and a twinge of envy creeps in. Suddenly, you can't take it anymore. FOMO takes over and you rush to get in line. You're determined to get on that Ferris wheel and experience the excitement for yourself. You wait impatiently as the line moves slowly, your anticipation growing with every step. Finally, it's your turn. You step into a cabin, and as the wheel begins to rise, you feel a rush of exhilaration. You're part of the action now. But as the cabin reaches its peak, you realize something. The view isn't as spectacular as you thought. In fact, it's just like the view from the ground, only higher. Finally, it's your turn. You step into a cabin, and as the wheel begins to rise, you feel a rush of exhilaration. You're part of the action now. But as the cabin reaches its peak, you realize something. The view isn't as spectacular as you thought. In fact, it's just like the view from the ground, only higher. The ride continues, and as your cabin descends, you start to feel queasy. The thrill is fading, and you can't help but wonder if you made a mistake. By the time the ride ends, you're relieved to be back on solid ground, but you can't shake the feeling that you wasted your time and money. This carnival ride is a lot like the FOMO effect in trading. When you chase after hot stocks without a plan, you often end up feeling like you missed out on something big. You enter the trade with excitement, only to experience a roller coaster of emotions as the market moves against you. And when it's all said and done, you're left with regret and a smaller trading account. Tim's story is not unique. Many traders fall into the impulsivity-regret cycle, where impatience leads to impulsive actions, resulting in losses and subsequent regret. Let's break down this cycle and see how it unfolds. Impulsive entry. It starts with the impulsive entry into a trade. You see a stock moving quickly, and you can't resist the urge to jump in, fearing that you'll miss out on potential profits. This impulsive decision often leads to buying high. Fear and panic. As soon as you're in the trade, fear takes hold. You watch every tick, every fluctuation in price, and panic sets in when the stock moves against you. Your heart races, and you feel the pressure mounting. Hasty exit. Unable to bear the discomfort, you hastily exit the trade, often at a loss. You tell yourself that it's better to cut your losses and move on. Regret. Shortly after exiting, the stock does the unexpected. It reverses and goes in the direction you initially anticipated. Regret washes over you like a tidal wave. You realize that if you had just held on a little longer, you could have been profitable. Repeat. The cycle repeats itself as you chase after the next hot stock, hoping to make up for your previous losses, and so the pattern continues. It's like trying to catch a greased pig at a county fair. Every time you think you've got it, it slips through your grasp, leaving you frustrated and exhausted. The impatience trap comes with a steep cost. It's not just about the financial losses, although those can be substantial. It's also about the toll it takes on your mental and emotional well-being. Trading becomes a roller coaster of stress, anxiety, and frustration. Think about it. Every impulsive decision you make in the market is a step further away from your financial goals. It's money that could have been saved, invested wisely, or used for something meaningful in your life. But instead, it's gone, lost in the frenzy of impatience. And then there's the toll on your self-esteem. Each time you make an impulsive trade that results in a loss, it chips away at your confidence. You start to doubt your abilities as a trader, and that doubt can become a self-fulfilling prophecy. So, what's the solution to breaking free from the impatience trap? It's simple but not easy. Patience. In the following chapters, we'll explore how you can cultivate patience in your day trading journey. We'll learn to resist the FOMO roller coaster, make rational decisions, and wait for the perfect setups that can lead to consistent profits. It's a journey that requires discipline, but the rewards are well worth it. So, fasten your seatbelt and get ready to leave the impatience trap behind. That's it for today's video, folks. If you've ever found yourself caught in the FOMO roller coaster or trapped in the impulsive cycle, know that you're not alone. We've all been there. The key is to recognize these patterns and work on cultivating patience in your trading.